Testing in a supply area on the ES Mini using a 5-minute time frame. So here is a little study of no demand in a previous area of supply. And bar A here is our no demand bar. It's an up bar, so we can see with lower volume than the previous, or quite considerably lower volume than the previous two bars. So what do we note about this no demand bar? Well, don't forget, this time we are testing a supply area. So we need to look to the left of the chart. In the previous chart, we were looking at no demand after direct weakness. That coming in the form of an upthrust with no demand, or we came down and we broke support followed by no demand at resistance. Okay? So here we're testing a supply area. First thing we note, we come down, and what do we note? Good selling, good spreads, ease of movement, and then we push up here and we go sideways. Price halts. Then at B we get a clue. What is B? B is effort versus result. Slightly narrow, what's more same size spread, yet volume has increased, and we make no upside progress. Technically, yes, this is an up bar and we gain that much. However, with all that extra volume, we should be taking off. Yet we don't. In fact, we react from here. So therefore, we know that all that extra volume is selling. It has to be. And what do we note from the reaction? RC. Lower volume than B, yet a nice wide spread closing weak that breaks this local level of support. This is ease of movement to the downside. There's good flow. There's no real buying friction. And why is this? Well, bar B we know was a bearish case of effort versus result, has eradicated all the pressure. And this is shown or illustrated by this move down. Okay, we get good of movement at bar C. Bar C achieves a great deal. It closes under all of this action and all these closes to the left. So this is a weak bar showing ease of movement after a bearish case of effort versus result. So from C we come down and we hold this support here, and we hold here. And then what do we know over here? A cluster of closes. Beautiful 4 little cluster here. Then we dip under to reverse and close firm. This is a form of springing action. This isn't a spring because we don't have enough white space, and this is a hidden spring. We will discuss this in session 7 or 8, session 8. But we notice the cluster. We can see this springing action. Therefore, we know a rally is on the cards. Then boom, what happens? Bar D, huge surge in volume. Looks fantastic. We close strong with a wide spread closing above this level of resistance. However, what do we know about a break? I'd ideally like to see a spread closing over 50% of the spread closing above our area of structure. And D, we only closed 20% or 15% of our spread above our area of structure. So ask yourself, all this volume, what does this bar actually achieve? Yes, we do break structure, but it's not convincing. We would like to have a spread like this with all that volume. So therefore, I mean, this is far from a clean break. And then what happens from D? Price stalls for 90 minutes. We go nowhere. So if all this was buying at D, why are we not taking off to the upside, or at least testing the highs here or this resistance here. Therefore, now we know that D is climactic in a way. It acts like an upside shakeout. There's no continuation of buying. And as we do react from this level, what happens? Volume increases. There's some selling. This should not occur if bar D was indeed buying. Now we focus on bar A. Think logically about bar A now. We know B is a bearish cause of effort versus result. Hidden selling. Then we get good ease of movement. D we now know is climactic because there's no upside follow through. And to the left we have selling and selling and selling, and we're making lower prices. So we have a no demand bar. Think about this. There's no buying force. In fact, it's the lowest spread, lowest volume, narrowest spread up bar on the chart, while we're trying to break resistance in an area of supply. This prints between B and D. So logically, there is no buying force to propel this market higher. Does this look like a genuine break? No. This is no demand in a previous area of supply. We can instantly short on the close of the bar. We can instantly short the close of A. We have no demand trying to break resistance in an area of supply. And there is a great deal of supply to the left. Compare these volumes all along here to this bar trying to break. Odds favour that this is going to hold and the break is not genuine. Now the response here on this bar is a gift. Usually you would get and expect a move because we are disconfirming demand, so we would expect lower prices, but the way this unfolds, like I said, is a gift. We wouldn't expect a move this dramatic to fall this sharp. This is excessive, and I would say it's not particularly healthy for shorts. Yes, we get a good move down, but it's a very widespread, ultra high volume if we compare it to other bars on the chart, and we close well off the lows. That indicates buying, which of course is not healthy. If we're short, we want to see selling of good quality. This is dramatic. This is not good quality. It's dramatic. And in an ideal world, we don't want we don't want drama. Difficult to read. Okay. So this is a lovely study. It's a good example of no demand in a previous area of supply. In the beginning, I stated, we can have no demand after an up thrust, or if we come down and we break with validity, then we have a no demand. We come from direct weakness. Here, we have to do slightly more analysis because it's areas of supply. But by deducing the background conditions of weakness, and we can read that is bearish cause of effort versus result. D is climactic. With all this volume, it doesn't achieve anything. No continuation to the upside. Acts like an upside shakeout. And then we print bar A in the middle of all this selling area. We have this amount of buying force is suspect. This is telling us there is no demand in the market. And then boom, we get this response. Good. On to the next chart.